Joining me now is Jay Woods. He's the Chief Market Strategist at Freedom Capital Markets. Jay, welcome.
It's good to be with you.
Good to see you. So we're about 30 minutes from the start of trading.
Yeah.
What are you looking forward to in today's session?
Yeah, there's a lot to look forward to, but let's look back. Let's talk about Friday. This market is bending but not breaking. Friday, we had a gap lower, and there was a little panic like, wait a second, this trend of the overall market may be changing. Both the S&P 500 and the NASDAQ 100 gap below a key moving average, as technicians look at that 50-day moving average. Well, that opening was the low. We rallied back. We climbed back above those averages. So now we're looking for a little stability, and I think this week, with all that information you mentioned at the top of the show, we're going to sift through it. But there's one thing in particular that we're watching, and that's one earnings that I'm sure we're going to talk about in a second.
All right, and we just saw the longest government shutdown and 43 days. Why did we see a sell-off after it ended?
Yeah, that was a textbook example of buy the rumor, sell the news. In this case, we sold the news. We knew that this was eventually going to come to an end, and when it did, it was just like, all right, sigh of relief. People just getting out. There were a lot of other factors involved. This AI narrative, valuations aren't right. Things like that have got people a little nervous. So the shutdown sell-off wasn't too dramatic, but yeah, we were just exhausted as well. So I think the market took a bit of a breather. And this week will be that pivotal week where I feel we'll get either that rally that leads us into year end, or we stumble a little bit. So I can't wait to see how the rest of this week goes.
All right, and speaking of the AI narrative, Nvidia is releasing earnings Wednesday after market close. What is at stake with its results?
Yeah, I mean, this isn't hyperbole. It's the most important stock in the world. And why do I say that? It's the highest weighted stock in the S&P 500. Close to 8% of the S&P 500 rides on the tails of Nvidia. In the QQQ, the NASDAQ 100, it's almost 10%, 9.8 to be exact. Semiconductor index, the SMH, the XLK, the technology ETF, #1 holding in both. And then, oh yeah, it's in the Dow as well. So as Nvidia goes, so will the markets. And then on top of it, we're looking for that AI story. What's going on in tech? Well, who's the bellwether? It's Jensen and it's Nvidia. So that earnings forecast, that guide, and that look into the future are critical. And then when I look at it as a technician, that price action, the stock did break out. It went to new highs just above 210. It's pulled back to this 185 level. It's trading 190 in the pre-market. Let's see if we can hold 185, 180, worst case scenario on a dip. Because sometimes this stock will report good earnings and they'll just consolidate for a little while. As long as it consolidates at these higher levels, I think the market will be okay. If we break down, then I'll be on your show the next time and saying we have some concerns, because when technology is not leading, the stocks that may make up the rally on the back end and people will rotate into aren't going to be enough to lift the market to new highs into year end.
All right, and besides Nvidia, what other earnings are you going to be watching this week?
Oh, you mentioned them at the top of the show, those retailers. Home Depot, that's a stock that's down 6% year to date, can never find its footing. It's very frustrating for me as a trader. Every time you think it's going to rally, it doesn't. Watch 380 in that. That's a 200-day moving average. That's the barometer of health I use when I look at Home Depot. We've got Lowe's. We've got Walmart. New CEO coming in. So our departing CEO's final earnings call. Walmart has been doing well. It's a bellwether of the American consumer. So when you have Lowe's, Home Depot, Walmart, BJ Services, and then TJ Maxx. No one talks about TJX. That's up 21% year to date. That is a good bellwether on the lower end consumer, which a lot of people are concerned about. But I think high end is going low end, and that's why TJ's been doing well. Let's see if they continue price action going into their earnings. Very favorable. It did break out, but it didn't run away. So TJX on Wednesday is another one I'm watching in particular today.
All right, and 13 F filings for the quarter were released on Friday. For our viewers who might not know that much about them, what are they and what did they reveal?
All right, so every quarter we get 13 F filings. These are filings by some of the largest institutional, most well-known investors out there, the Warren Buffetts, the Bill Ackmans of the world. And when they get into a stock, they have to say what they've bought, what they've sold. And when they do, it becomes news. So Warren Buffett's Berkshire Hathaway just started a position in Alphabet. I call it Google, but it's Alphabet. And all of a sudden, what's going on? Alphabet is up 5 to 6% in the pre-market, because if Warren Buffett's in it, That's the smart money. People want to get in it. Now, the one thing people don't understand about 13Fs is they file them 45 days later. So he's had this position. Maybe they're exiting this position. But when a big name investor, a week ago was Michael Berry, he was shorting Palantir and Nvidia, he released his filing a little earlier. It was a little strategic, perhaps. It was just on Palantir's earnings day. Maybe I'm reading too much into it. But when these big time investors do make these filings quarterly, people watch because they want to see what the smart money is doing, and that could be an indicator of things to come. Warren Buffett got into Apple about 7-8 years ago, a little late on the scheme of things, still crushed it, and now he's getting into, or his firm is getting into Google. So maybe Berkshire is starting to change their stripes as Mr. Buffett retires in January.
We can't let you go without talking about the Fed. They're releasing their minutes from their latest meeting on Wednesday. What do you think they might reveal about a potential rate cut in December?
Yeah, that's a great question. So we know that the Fed was divided at its last meeting. Jerome Powell did not mince words. December rate cut, not a foregone conclusion. We had two dissents, one for no cut, one for an additional cut. And then when they go on the road, they've been, all over the place. So it's a 50-50 shot right now as we tape this that there is a cut in December. We'll see what the Fed speakers have to say, but the minutes will give us a little more intrigue and, more soap opera-like setting as to what went on in that room and how far apart the Fed committee was at that last meeting.
All right. Thank you, Jay Woods, Chief Market Strategist at Freedom Capital Markets.
Thank you.
Thanks for joining us.